The South African Reserve Bank has made an emergency interest rate cut. The bank has cut borrowing costs by 100 basis points, reducing the repo rate to 4.25%. This takes the prime lending rate to 7.75%. This is the second rate cut of 100 basis points this year after the Reserve Bank lowered interest rates in March. It's another move by the bank to attempt to ease the economic impact of the COVID-19 pandemic. The Monetary Policy Committee meeting was originally scheduled for next week, but was brought forward to make the latest emergency cut. Let's get some reaction from Duma Gqubule. He's the founding director at KIO Advisory Services. Thanks so much for your time on SABC News this afternoon, Duma. Talk to us about the role of monetary policy in a crisis such as the one that we're in.
Okay, first of all, the way to understand this crisis and why it's unique is that it results in a simultaneous shock, as the governor said, to the supply or production side of the economy and the demand or spending side of the economy. Now, what has happened is that we have had we've shut down 2/3 of GDP for 1 month or 2 months, and so that it prevents us from spending on the demand side of the economy, and it prevents companies from producing on the production side of the economy. So what monetary policy does under normal conditions, it puts liquidity in the hands of households and companies. So the households can spend more money and the companies can spend more money. Now, at the Monetary Policy Review last week, the Reserve Bank released a presentation where they modeled the impact of a 100 basis point cut. They said it adds 0.6% to our GDP. So if we use that number, we could say that the two cuts that we've had will add 1.2% to GDP under normal circumstances. But because we have shut down 2/3 of the economy, it won't have the normal impacts that it would have. But I think it's a welcome move, and I believe that there's scope for further interest rate cuts over the next few weeks. I think the Reserve Bank has been using more monetary policy tools than usual, although it's using them cautiously. And I think it's time now for the Reserve Bank to up its game and start using more monetary policy tools in their toolkit here.
What do these two cuts that we've just seen mean for people living in South Africa?
Okay, so what the cuts mean, if I use the Reserve Bank presentation, it means that the interest costs have gone down by about 65 billion, and you mustn't forget the interest cut that happened in January as well. So their costs, the people who pay interest, the people who pay mortgages, and companies who borrow money as well. So that will give them relief in terms of that, so they hopefully can spend some of this money in the economy.
We're seeing very scary numbers being projected for the South African economy going forward. A number that's been bandied about quite a lot is a contraction of about 7%. What's going to happen with our economy going forward if we don't have more interventions?
That's a very good question, Zinga. So the Reserve Bank is always behind the curve in terms of their forecast. In January 16, they said the economy will grow by 0.4%. March 19, they said it would contract by 0.2%. Last week, Monday, they said it would contract by -2 to 4%. And I knew that was way too low. And today, they say it will contract by 6%. Now, I assumed right from the beginning that we're going to have 2 months of this lockdown, and my forecasts were -10%. And I think most of the forecasts right now are around -10%. Now, that is a huge cut in terms of drop in terms of GDP. If you look at the last time we had such a drop in GDP, it was in 1931 when our economy went down by 10.6%. So if we have if it contract by more than 10%, we might be longer than deeper recession. It's called a depression when it goes above 10%. So we are in a calamity. And one way of looking at it, Nzinga, is that this is 6 times worse than what happened after the global financial crisis, where GDP went down by 1.5% and we lost 1 million jobs. So if you try to project what would happen this time, it's too frightening to even contemplate.
Duma, what should happen next then in terms of assistance for South Africa facing these scenarios that you've laid out? We've heard from a presentation earlier on that $60 million is being sought from the World Bank, and there are discussions with the IMF to mitigate the impact of COVID-19 on South Africa's economy?
Okay, there was a presentation from London Business School where they talked about what should happen. They say that the extent of the monetary and fiscal stimulus must be in line exactly the same as the expected hit to the economy. Now, I say that the hit to the economy is about 600 billion rands or 12% of GDP. So what we need to do is to put income in the hands of households and individuals and companies. And there are various ways in which stimulus packages have been done in the rest of the world. The most popular one is cash transfers that has been done in about 80 countries, cash transfers to households. So what I believe that we should be done, there's a big debate happening in South Africa. We need to introduce a basic income grant for 6 months. That is about 200 billion rands. We need to top up the child support grant and give relief to people for 6 months, and that is about 40 billion rands. And so those two interventions are about 240 to 300 billion rands. And then the next thing we need to do, we need to provide a wage subsidy to companies, as you've seen in many countries throughout the world. So what they've done is that if a company is about to retrench people, and the focus is on small and medium enterprises who employ most people, they will get some kind of support to keep people working and to keep people earning even though they're not working. So the idea is to keep people in a similar situation than they were before this calamity hit us, although they may not be working. So we have to start thinking about innovative means of supporting also the production side of the economy. Now, the Reserve Bank, the governor says, we can't do anything on the production side of the economy. But if you look at what's happened in the Bank of England and the Bank of Australia and the other central banks, they've taken drastic measures to support companies in terms of providing them with loan guarantees, loan facilities to be able to pay people while this lockdown happens. And you must remember, last thing, is that this is a 2 to 3 month lockdown. And I think the government, before they announce this lockdown, they should have had measures in place to protect households and companies during this lockdown.
Duma Gqubule, the founding director at KIO Advisory Services, thanks so much for your time and analysis on SABC News.